FXCOINZ, this is Christopher Lewis taking a look at the NASDAQ 100 and the S&P 500. Over the last several weeks, we've seen a lot of volatility in both these indices, or maybe I should just use the word chop, which makes a certain amount of sense considering there have been concerns about the whole artificial intelligence narrative and whether or not it is profitable. Furthermore, we have a lot of noise coming out of central banks trying to sort out whether or not the Federal Reserve is going to continue cutting, because even though they just cut again over the last several days, the reality is they still haven't gone all in on the automatic rate cut narrative that I believe Wall Street's looking for. Furthermore, when you look at these charts, they both look very strong and they have been in a 45-degree trend to the upside. So spending a little bit of time going sideways is just simply working off the froth, especially as we go into the holidays, which makes a certain amount of sense. That being said, there normally is a little bit of a bid to the month of December, so one would assume sooner or later the buyers come back and the technical picture does look pretty favorable, at least at the moment. The NASDAQ 100 finds itself dipping below the 25,000 level early on Tuesday, but it does look like the 25,000 level is causing a little bit of a pushback, and we are sitting right here at the 50-day EMA. If we can break above the highs of the Monday session, then it opens up a move to the 25,850 level. If we break down from here, 24,000 could be support as well. Either way, it doesn't look like a market that's ready to fall apart quite yet. It just looks like a market that had a massive move all the way from April until the beginning of November, and since then we've just been trying to catch our footing. The S&P 500 has fallen to reach the 6,800 level, which of course is a large, round, psychologically significant figure that is also backed up by the 50-day EMA. So I think it's probably only a matter of time before buyers come back in. Really, all we need is some decent news. The market breaking down below the 50-day EMA would be negative, but really, there's a floor in this market from what I can tell at the 6,500 level. As long as we can stay above there, you're probably going to be okay. And at this point in time, I think this is a market, again, like the NASDAQ 100, is just trying to do what it can to work off some of this excess froth that had been thrown into it for the year. In other words, both of these still remain positive and probably buy on the dip.